Today I would like to analyze Micron Technology, one of the largest semiconductor companies in the world and one of the best performing stocks in the last 5 years. We are up around 159%. In the 1 year chart, the stock price is down around 5%, and they just announced the earnings, which were very good actually. Earnings per shares were around 1.91 US dollar, and they expected around 1.60 US dollar. The revenue was also higher. They expected around 8.9 billion US dollar and they announced around 9.3 billion US dollar. So this is very positive. So we're going to take a look at the financials to find out if it's a good buy right now. The first thing we can recognize is a market cap of 141 billion US dollar. This makes Micron Technology the 12th largest semiconductor company in the world by the market cap. We also have a dividend yield of around 0.36%, which we can see here did not grow very much in the last 3 years. Now we're going to take a look at the financials. The first thing we're looking for is revenue growth in the last 5 years. We want to invest in a growing business in a declining business. So in 2020, the revenue was around 21.44 billion US dollar. This was an 8% decline from 2019. In 2021, we saw the very good growth around 29%. In 2022, we saw the good growth around 11%. In 2022, we saw the big decline around 49%. This is something we don't like to see. So if we ask ChatGPT, we can see some reasons as well. The downturn in the memory market, so they sold less smartphones and data center purchases. And we also had the geopolitical issue with China that they banned from purchasing the Micron products. We can see here the China sales dropped around 39%. So this is some of the reasons. Then in 2024, we saw the strong comeback with a growth around 61%. So overall, we still had a revenue growth in the last 5 years. So it's still a check here for me. The next thing we're looking for is the free cash flow growth in the last 5 years. The free cash is very important because it can be used to pay the dividend, to pay the stock buybacks, to invest in the business, and also to pay back the debt. So we can see here in 2020, the free cash flow was around 0.08 billion US dollar. So this was a big decline, around 97% from 2019. Then in 2021, we saw the comeback with a growth around 2,800%. And then in 2022, we saw the good growth around 27%. But then again, in 2023, we saw the negative free cash flow. So this is something we don't like to see. And finally, in 2024, we saw the positive free cash flow again, around 0.12 billion US dollar. So the reason for that is here as well. We can see the capital expenditures are very high. In 2020, it was around 8 billion US dollar. In 2021, around 10 billion US dollar. And then in 2022, around 12 billion US dollar. So it increased over the years, but now also we can see it declining again. We can see the capital expenditures is around 8 billion US dollar. And we can also see the operating cash flow is positive. So if the capital expenditures decrease in the future, this company also can have the higher free cash flow as well. But for the free cash flow growth right now, it's not a check here. The next thing we're looking for is a free cash flow yield over 4%. This can also tell us about the valuation of this company. The higher the free cash yield, the higher the indication for undervaluation. So we're going to take the free cash flow from 2024. So this is around 0.12 billion US dollar. Then we're going to divide it with the current market cap, 141 billion US dollar. Then we're going to get a free cash flow yield for 2024. So this is around 0.08%. So it's not very high, it's a very low free cash flow yield. But we can also take a look at the free cash flow assumptions for the next years. We can see here in 2025, the free cash flow could be around 2.6 billion US dollar. In 2026, around 5.4 billion US dollar. And in 2027, around 7.5 billion US dollar. So I'm not sure if these numbers are realistic. Let me know in the comment section. We can assume for 2027, maybe around 6 billion US dollar. So let's take the 6 billion, we're going to divide it with the current market cap, 141 billion US dollar. And then we're going to get a free cash flow yield for 2027 with our free cash flow assumptions around 4.25%. And I think this is a decent free cash flow yield. It would be over the 4% and it would be a check here. The next thing we're looking for is a debt to free cash flow ratio under 5. This means the company can repay the debt with the free cash flow in under 5 years. So this is a very important number, because if a company has too much debt and cannot repay the debt, it can risk to go bankrupt. So first we're going to take the long-term debt. This is around 11.24 billion US dollar. Then we're also going to take the short-term debt, 0.11 billion. And then we're going to divide it with the current free cash flow, 0.12 billion. Then we're going to get the ratio that we're looking for. So this is around 94.58. And that's very high. It means in close to 95 years, we can repay the debt with a free cash flow. It wouldn't be a check here right now, but we also need to assume that the free cash flow can increase in the future as well. So we can see here in 2027, the free cash flow assumptions is around 6 billion. So we also can calculate this number again with a free cash flow of 6 billion. Then we're going to get a different ratio. So the number we're going to get with the 6 billion would be around 1.89. And this means in a little bit under 2 years, we can repay the debt with a free cash flow. And that's a very good ratio. Actually, it would be a check here. We like to see that. Then we can also take a look at the cash on hand, how much cash this company has in the bank. We can see here around 8.11 billion US dollar. And I also think this is a very good amount. So overall, I think this company has a good balance sheet. The next thing we're looking for is the enterprise valuation to free cash flow ratio under 25. So this can also tell us about the valuation of this company. The lower the number gets, the higher the indication for undervaluation. So we want to see a low number here. First, we're going to calculate the enterprise valuation. This is the current market cap, 141 billion US dollar. We're going to add the debt as well. So the debt is around 11.35 billion. We're going to take minus the cash, 8.11 billion. And then we're going to get the enterprise valuation, how much the whole company is worth. So the number we're going to get would be around 144.24 billion US dollar. Then we're going to divide this number with the current free cash flow, 0.12 billion. And then we're going to get the ratio that we're looking for, and that's around 1,202. And that's very high actually. So obviously this is an indication for overvaluation, but we should also calculate this number for 2027 with the free cash flow assumptions of 6 billion. Then we're going to get a different number. So the number we're going to get would be around 24.04. And that's quite good actually. It would be an indication for a fair valuation. It's under the 25. So it would be a check here. And I think this is something interesting. The next thing we're looking for is shares outstanding decrease. This means the company buys back their own shares. We like to see that, especially if we think the company is undervalued. So we're going to take a look here, and we can see this company had some buybacks in 2018, 2019, and in 2022 as well. Sometimes even over 2%. But we can also see in some years the shares outstanding increase. So overall, I think it's not a check here in the shares outstanding decreasing. Can Micron Technology stock be a good buy right now? So let's start with a positive about this company. I think we had a good revenue growth in the last 5 years. The balance sheet is also looking quite good, so the debt amount doesn't look too high, and they have a good amount of cash on hand. The free cash flow yield around 0.08% is looking very low actually. This could be an indication for overvaluation. But in 2027, with our free cash flow assumptions of 6 billion US dollar, the free cash flow yield would be around 4.25%, which would be quite good and I think a fair valuation. The enterprise valuation to free cash flow ratio right now is very high of around 1,202. We want to see that number under 25. In 2027, with the free cash flow assumptions, this number could be around 24.04. which would be a good valuation, I think. So overall, I think this company can have potential, but only if they continue to grow the free cash flow, and only in my opinion with the free cash flow assumptions of 6 billion US dollar in 2027. If you found this video helpful, don't forget to like and comment and subscribe for more content.